So what is going on, guys? Welcome back to the channel. My name is Tyler. Something about volatility and seeing AMC selling off gets me very excited, not because my portfolio or my position is going down in value, but because I can acquire more shares. And that is exactly what the hedge funds and institutions have been doing as well as far as the Fintel data is concerned. So we are going to be going over that because I think it tells a lot. Through all of this uncertainty and doubt, all of these funds are still buying AMC. Probably why AMC is doing a lot better than even some other stocks, even some tech stocks that are down 7 to 10%. So all in all, this is not a bad day relative to what the markets are doing. But let's talk about my worst case scenario for AMC and exactly what I would do if this worst case scenario does play out. Now, with this whole debt ceiling situation, which we will get into right after I just explain this, this could make the markets go down a lot, but if we do get the debt ceiling actually being raised, we could see a huge bullish boost based off of this. Either way, I think it's a win-win for AMC apes if you're looking at this in the right perspective. What is the one thing, the only thing that matters with the AMC mother of all short squeezes? Hopefully you guys already know this, but it is the short interest. If we were seeing the short interest going down right now, that would be a bad thing. We are seeing the short interest going up. That is a good thing. That is exactly what we want to see, but we will touch on that in just 1 second. Let's talk about AMC. AMC down 4.22%. Yes, we are going down. We were at about $40 just in pre-market today, and then we did come down to $37.25 on the low, now at $37.60 per share, but we are really in this range bound motion ever since we did hit $37.25. We're pretty much consolidating in between about $37.50. So the fact that we are not straight selling off shows a lot of confidence. It shows that other apes are holding their conviction and holding on to their positions. Now, to talk about the worst case scenario, it will be if we default on our debt. If the United States does not pay its treasury bonds, and I mean, there's a whole list of other things this would cost or cause. But let's talk about what Janet Yellen did say. They're actually speaking right now. I'm sure some of you guys are watching that, but let's get into it. Congress must raise debt ceiling limit by October 18th. Treasury Secretary Yellen warns in new letter as default looms. Key points. Treasury Secretary Janet Yellen told House Speaker Nancy Pelosi that Congress has just under 3 weeks to address the looming debt ceiling and avoid economic calamity. In quotes, we now estimate that Treasury is likely to exhaust its extraordinary measures if Congress has not acted to raise or suspend the debt limit by October 18th, Yellen wrote. She actually does say in this article that they may theoretically be able to stretch this out a couple more days, but by October 18th, they are going to be in some serious trouble. Senate Republicans on Monday backed a bill that would fund the government and suspend, or blocked a bill that would fund the government and suspend the U.S. borrowing limit. Obviously, yes, there is a lot of negative things about this whole situation. I don't want to get into politics, but it's not necessarily about the debt ceiling. It's about everything else that Democrats want to include. I don't have a political party. I don't care about any of this. I only care when it affects my investments. So that is the best way to look at it. We are not politics on this channel. I don't care what your political view is, and hopefully you don't care what mine is because I don't have one. But that is the situation. That is going to be our worst case scenario if the United States, for the first time in history, does default on its debt. Now that they have actually put this date in investors' minds, the markets are selling off a lot today. The Nasdaq is approaching 3% down. Even the rush to safety, the Dow Jones Industrial Average down 1.5%, S&P down about 2%. Russell 2000 doing the best, or almost the best out of all of these, only down 1.66%. The VIX, the volatility fear index is basically what it's known for, almost up 30%. So definitely seeing a lot of fear in the markets. You're seeing liquidation, not a mass liquidation, because the speed of this is not very fast. If you guys see the SPY, we're continuously going down all day, but you're not seeing big gaps down, and that is what I'm looking for, to really see that level of fear coming to fruition. Yes, it is getting pretty bloody. But like I said, once you see that fear start to kick in, you're going to see big gaps down. Now we are sitting right at our 100-day moving average, which has been our level that we have bounced off of after we did drop under this 50-day moving average. Back here, right here, 2 times. This was back here in September of 2020. We have not touched this since, and every time we have bounced off this 50-day moving average. So if we do come under this, which is looking likely today, as we still do have 4 hours of trading. That is the scary thing. We have 4 hours of trading left in today, and this situation is probably not going to get much better. If we do go under this 100-day moving average, you're going to see trading algorithms really start to sell out and protect themselves and do some hedging, which will also bring down the market. Now, to address this negative beta situation really quick before I get into my worst case scenario with AMC and what I would do, as far as a negative beta is concerned, during times of low fear in the markets, during times of, per se, back in summer when nothing was really going on in the markets, yes, negative beta did play a role with AMC. AMC would directly discorrelate the markets, but during times of high volatility, high fear, and sell-offs in the overall market, yes, AMC is going to be affected. Possibly why we are not seeing AMC down as much as some other stocks may be due to the negative beta, but you guys got to know negative beta is not something that I would just count on. Take it with a grain of salt. Really throw it out the window, because we are not in a situation where negative beta will mean anything with AMC. Now, let's talk about my worst case scenario, and then let's talk about the funds that are still buying AMC. Now, my worst case scenario, guys, this is my absolute worst case scenario. I do not think this is going to happen, but the worst case scenario, get ready for it. It's about a 50% drop from where we currently are, taking us to about $20 per share. Now, that is not all too bad depending how you look at it. If AMC was $20 per share, I would be able to acquire many, many more shares. I would probably 5x my position in AMC, just because I have a severely high level of confidence in this trade, because the only factor that matters is the short interest, which is climbing every single day, now at all-time highs, 20.76%, 106.19 million shares that are sold short. Utilization is down as well at 87%. That means there is plenty of shares that are still able to be sold short, which hedge funds are definitely going to take advantage of that. So we are going to see the short interest continue to climb, likely tomorrow go to about 21, even 21.5%. So that is very bullish. Everything around AMC is very bullish. If you guys want instant gains and satisfaction, that's the bad way to look at it. This is really a time game, and like Warren Buffett says, the stock market is simply a tool used to transfer wealth from the impatient to the patient. So how patient are you going to be? Is it worth millions of dollars? Say it takes a couple months or a couple of years. Who knows how long, but is it worth it to you guys? Free float on loan, 22.51%, likely to go up as the short interest has come down so much over the past couple of weeks. So that's what you guys need to know from that. Like I said, that is my worst case scenario. AMC dropping to about $20 per share. I know it would scare a lot of apes temporarily, but not something to be too concerned about. If you do have margin, that's where you're going to run into some problems. Consider paying off your margin before something like this does happen. Odds are I still think about a 75 to 85% chance the debt ceiling will get raised and we will see a crazy rally with AMC and the overall market. Now, let's wrap this video up with going over the funds that are buying AMC. Take a look at this. September 27th, that was yesterday. September 24th. All of this is basically brand new funds that are buying into AMC. Take a look at this, guys. Bunch of buys, lots of holds, but take a look at all these green buys. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Right there, 10 funds in September that have bought out. 11 funds, actually. One fund that is sold out, and that's Virtue Financial. So all in all, you're seeing a lot of bullish activity. Likely why we are not selling off even more. Possibly hedge funds, institutions are continuing to buy AMC on these dips. So that is what you guys need to know. Hopefully you guys got some value out of this video. Check out the links linked down below in the description if you guys want to be notified every time a trade is made. We're going to be doing a lot of hedging here by the end of today. If we do get a bounce in the markets, that's the time to strike on a lot of my hedging ideas. Diaz. So if you guys want to be notified every time a trade is bought or sold, check out the link for the buy and sell alerts, link down below in the description. If you guys want to support the channel, link for public as well as a link for Weeble. So with all that being said, guys, I look forward to seeing you guys in the next video. Hopefully you guys are not panicking. You guys stay cool. I'll see you in the next one.